Welcome to another episode of ETF 360. I'm Tom Lydon, along with our Director of Research, Dave Nadig, and a special guest, Nick Cherney, who's head of ETFs at Janus Henderson. Hey, Nick, how are you?
Doing great. Good to see you guys.
Well, it's great seeing you, and congratulations. You just dumped a whole bunch of ESG on us in the form of some ETFs. Tell us about it.
Yeah, we try not to use the term dumping, but yeah, we did launch quite a few new products. It's been a huge effort, obviously, for us, and pretty excited. I mean, I think we have a little bit of a unique approach to the space, and we've sort of seen, a huge amount of investor interest, kind of increasing overall in ESG. But I don't know, from our perspective, there's been a little bit lacking in terms of some of the products that have been available, and certainly from talking to our clients. They've been facing some challenges in terms of really adopting a lot of the products that are out there in a way that is consistent with the way they build the rest of their portfolio. So we're pretty excited about the launch and sort of showcasing what we've been doing here for a long time, but really not had a public-facing or sort of U.S. product-centric offering in the area.
Is this a new space for you? I mean, I don't think of you all as name above the title leading the ESG charge, but you guys have actually been in the space for quite some time. Why now for an ESG launch?
Yeah, I mean, we have a flagship fund in the UK, the Global Sustainable Equity Fund, that has a 30-year track record. It's one of the oldest sustainable and ESG-focused funds out there. We're an original signatory to the UNPRI. So we've been doing it for a very long time. But really, the impetus now is kind of two things. One I alluded to. It seems like investors are catching up, right? There has been a real shift in thinking about how you can incorporate ESG in your portfolios. Kind of a breaking down of this idea that it's some sort of trade-off between sort of doing good and having good investment returns. And so we're really seeing a huge kind of shift there. And then the other piece is that we have engaged in a pretty serious effort over the last couple of years to take the core expertise that we have in many areas of the firm and really bring it all together. We've built out a kind of fairly robust platform in terms of how we think about ESG from an investment standpoint, from a client standpoint. And so this is really a chance to showcase the work that we've been doing over the last couple of years.
Nick, there are a lot of different ways to go at ESG. How are you doing it differently?
Yeah, I mean, the way we see the market is that it's kind of been broken into these two camps. You have a lot of traditional ESG shops, kind of specialist shops that have been doing it for a long time and really are experts in evaluating some of the complex issues around ESG investing. But then when it comes to returns and thinking about how to build actively managed portfolios that are sort of, can beat the benchmark on a risk-adjusted basis, a lot of times that conversation sort of ends with the idea that investing in good companies will lead to good long-term returns. And we believe that's true, but we also think there's a lot of sort of short and intermediate term factors in investing that need to be paid attention to. And so we're trying to kind of bring those two things together, kind of this nexus between good companies and good investment results. And where we've seen a lot of growth and a lot of product development, unfortunately, from our perspective, is in the passive space, where for ESG, really when you're doing passive, you're just applying third-party negative screening, right? And we sort of view that as the bare minimum first step in our process, right? We need to exclude companies that don't meet the kind of high standards that we have in these portfolios, but there's a lot more work that needs to go into it beyond that, and that's really what we're trying to bring to bear, is some of the nuance and the complexity involved in really having impactful, sustainable investment strategies.
So sort of the professional investor meets the ESG investor, put it in one clean package.
Yeah, I think that's a pretty fair assessment, Dave. You got a job if you want one on our marketing side.
Hey, Nick, before we let you go, how come Europe's got this right as far as ESG? How come they're so far ahead of what we're doing here in the States? Where are we messing up?
I don't know that I would totally agree with that. They are further ahead, and the reason is because sort of this demand trend that I talked about has just hit earlier there, right? And so as a result, both the product side, the regulatory side, all of the other things that are trying to catch up with the demand side are just a little bit further along. But if you look at the shift over the last 18 to 24 months, I think we're going to see the U.S. catch up very, very quickly. And look at the product launch, right? I mean, just purely from what's available out there to investors, the growth is almost exponential. So I really do see us catching up quickly. And so I agree we're behind, but we're not that far behind.
So Nick, thanks so much for being a part of this, and congratulations on the launch. And we look forward to hearing more great things.